Great.
Hi. Hello, everyone. My name is Irina Gusakova, and I'm an investment analyst with Atlantic Bridge. Augmented reality in 2018 is finally in the mouth of every consumer in the Western world. With Google and Apple entering the space, startups like Magic Leap picking up, and established industry leaders like Volkswagen, Boeing, Bosch, and Siemens understanding the potential of augmented reality technology, the VC community has finally stopped ignoring AR in 2017. The amount of investments has been skyrocketing. Yet, the profitable exits have been missing. I'm extremely pleased to welcome their leading VC funds, the European and American VC funds, here on stage today. And I'd like to make the good use of the next 40 minutes to discuss their views on the still growing augmented reality market. I'd like to ask the VC representatives to come on stage. We also do have a special guest, and instead of quoting the statistics, we would like to invite Tim Merrill from DG Capital to present us the latest numbers on their investments made in the XR space in the past 12 months, here on stage with us as well. Thank you, Tim.
You're welcome. There we go. Okay. So, because this panel's going to be talking about investment, they asked me if I'd come up now and talk about investment. We, as well as all of the revenue and companies and platforms, we also track what's going on with investment. And what we're going to do right now is look at the last 12 months, because it's been a really interesting time. One of the things I do, amongst others, is I write for TechCrunch about AR and VR. And at the end of last year, I interviewed about 30 VCs in Sand Hill Road in China about where the market was going. At that time, they said they saw a fundamental shift from basically investment into VR in the States towards more mobile AR and computer vision, particularly focused on the Chinese market. And while they were right about the direction, they didn't quite anticipate how fierce that change was going to be. The short version is that in the last 12 months, there's been $7.2 billion invested into the market. But the largest part of that has been around where computer vision and AR and mobile AR meet. So if we start by looking at deal flow and look at it by sectors, what you see is that in terms of the number of deals, so this is volume, so how many deals have been done, it's been dropping by about 10% a quarter for the last year. So it's currently running at about 40% down in terms of the number of deals that it was. So to get a better feel for the stages and who's actually feeling that pain, let's look at the deals by stage. And what you see is when you look at the blue bars, that seed deals have dropped by half. So if a company's trying to raise money at the seed stage, it's become much more difficult. Series A deals have dropped by about a quarter. So there also has been some decline. But the interesting thing isn't so much the decline in deal volume, but what's been happening with the actual dollars invested, and also what's happening around the different regions and countries. So if we go from looking at the deal volume, the number of deals, to looking at the deal value. And what you see is that there was a record of what was then the last record of just over $2 billion invested in the last quarter of last year. It dropped in the first quarter. It's been steadily climbing back up to where it was well over $2 billion in the last quarter. But the interesting thing is regionally what's been happening. So we'll start by looking at America. And when we look at America, we get a very clear picture. What you see is that about a year ago, there was then a record of about $1.5 billion invested into US companies by VCs in the AR and VR space. That's dropped dramatically to where in the last 3 months, there was less than $120 million invested. What's been happening is that VCs in the States have been waiting to see mobile AR traction as a sign of long-term growth. In other words, they've taken a long-term solution to a short-term problem. When you then go away from the States and look at Asia and at China in particular, that's where you see the real investment and also the real foresight. The picture around China is very, very different. Where a year ago, Chinese investment was about a third of American investment, in the last 12 months, we've seen $3.9 billion invested by Chinese VCs, primarily into Chinese companies. And where the big money has gone into has been into particularly computer vision companies crossing over into AR, many of which folks here in Europe and America are not even aware of. Companies like SenseTime, MEGV, Kujiali, and so on. And that's really the big story in terms of what's been happening with investment and M&A, investment on a regional level over the last few years. The last piece I'll do is look at a global level, so you can see, again, what the deals look like. And again, you can see here China, much, much larger, particularly on the core tech space than America, and again, significantly larger than the investment in Europe. So now I'll leave it to the panel to talk to you about how they think about investment. Vielen Dank. Tschüss.
Thank you very much, Tim. Thank you. Wow, very interesting statistics. Allow me to welcome to the stage Kim Höffken from BASF Capital Ventures, Ryan Wang from Outpost Capital, Barry Downs from Sur Valley Ventures, and Paul Klemm from Earlybird. Warm welcome, gentlemen. Would you like to give a very quick introduction about your funds, about yourself?
Should we start here? Or? Okay.
Yeah, go ahead.
Probably the only CVC in here. It's a corporate venture of BASF, chemical company. Our fund is investing primarily into digital, I would say, topics that somehow are interesting for our customers. I would say that's kind of the focal point. And I myself have an IT background and also an MBA, and now working in the CVC section for roughly 2 years.
Great.
Super. Hi, I'm Barry Downs. So I run a venture capital fund based out of London in England and also Dublin in Ireland. We invest in 3 key areas. We invest in augmented reality tech, virtual reality tech, and the Internet of Things primarily. And we do a little bit of some emerging areas for fintech as well. And so we've done a number of deals in London in particular, and also in Dublin, that I look forward to talking about and telling you a bit about how we invest and what we're looking for as well.
Hello everyone, my name is Ryan Wang. I'm the founding partner with Outpost Capital. So Outpost Capital is an early stage frontier technology VC based in Silicon Valley, San Francisco. And we also have a satellite office that's based in Beijing as well. So we have 4 investment sectors: VR, AR, blockchain, drones and robotics, also artificial intelligence. So we think, for each of the sectors, there are a lot of similarities and overlap between all 4 sectors. And the strong similarities is what we define them as, is why we define them as frontier technology, because at the end of the day, it's going to impact a lot of things, but it's going to take time to get there. So happy to share more today on this panel.
Mm-hmm. Great.
Hi, I'm Paul. I'm with Earlybird Venture Capital, which is a venture capital platform managing 1 billion euros assets under management. We are located in Munich, so I'm actually from Munich, Berlin, Istanbul, and Cologne. With our latest fund being around $200 million US, we mainly focus on 4 to 5 areas, being mobility, logistics, industrial tech, fintech, and then last but not least, a lot of crypto. And then that brought us an area which is more technology driven, where also VR, AR is a part of.
Fantastic, great. I'll go straight to my first question. Consider the statistics we've just seen from Tim. I wonder, 10 years ago, augmented reality used to be predominantly a European domain. So the European company invested into R&D. They developed the very strong tech. Last year, let's say Valley woke up, and as we now saw, China woke up, and they started heavily investing in XR. There are a lot of startups appearing on the market, and you as a European VC, like, what's your role today? How do you see yourself? Is there even like place left on the global market?
first. Yeah. No, go ahead.
Okay. So I would say these are great signs, right? I mean, if the Valley woke up, if other countries or geographies woke up and are interested in the same thing, that means that we were earlier, and any investment we've done so far seems to be at least going into the right direction. So I would rather rate that as a positive outcome. Obviously, also the numbers you've just seen, the number of deals probably is declining, but the amount per single deal is increasing, so more and more money is coming. But I would not discount us in there as not playing the right role. Also, you have to remember that sometimes, especially the Valley, there's a lot of seed money there, but it's usually to a larger degree staying in the Valley. So the money that's coming over here is more targeting companies close to, I would say, Series A or later, which means that as long as we identify them earlier, it's a great handshake because they can help us growing that company to a larger degree.
Great. Barry?
Yeah, I would totally agree with that. And there was a great Economist article about 3 or 4 weeks ago on Silicon Valley and how innovation, for me, Silicon Valley is still really the home of software, but how innovation is spreading around the world. I think the data actually shows that innovation is spreading through Europe and to Asia as well. And I know from our investments, we've invested heavily in particular in the UK and Ireland, at an early stage in VR and AR companies, and those companies are doing really well and trading internationally. So, for example, we invested in a company called Immersive VR Education, and the way to think about them is they're kind of like their goal is to be the Coursera or edX of virtual reality. And we took that company to IPO in March of this year, and they're now launching. So the key for those Coursera and edX, as I would see it, is they launched with Coursera launched with Stanford, edX came out of MIT. So they're launching with Oxford University, which is the #1 university in the world, and I think that's going to help drive that company forward. So I think there's great opportunity in Europe, and European companies both to expand across the different markets in Europe and also go to the US and go to Asia as well. And education is one of those places, and university education is one of those markets that is essentially broken in many countries. And you could argue it's broken in the US in terms of the fees and how much it costs. The European model in different European states is slightly different, but it's still expensive to go to university in many member states in the European Union. And then also you have this large group of people coming from Asia that want high quality education, and we need new ways of doing it. So a VR education platform, I think, is a great way of doing that. And I think if you look at what Europe's got, I mean, it's got great universities, it's got great tech talent, and it's got a single market. Well, maybe not for the UK anymore, but for everyone else, yeah.
Okay, great.
Well, I'm not a European VC, so I guess for me to answer the question from a different perspective, being a Silicon Valley VC who was also born and raised in China, I think it's interesting that when I look into the U.S. market versus the Asian market, I see different things, right? As you mentioned, the Silicon Valley is driving the technology R&D. In terms of what's happening in the VR/AR space, what are some of the enabling technologies, as well as how can we push the boundaries of new technologies, and how can we come up with better SLAM, better position tracking, eye tracking, and live field for VT rendering, all these kind of enabling technologies. So definitely Silicon Valley and the US market is leading in terms of the new technology development. But in terms of the market adoption, right? How are consumers actually adopting these new use cases and applying VR and AR in their everyday life? We see a strong adoption actually coming from the Asian market. For example, there has been a lot of very successful VR LBEs and VR arcades that have been opening up in South Korea. And also in China, for example, VR education has been adopted widely by a lot of public schools. Some of them are elementary schools, some of them are middle schools, which are things that I haven't been seeing, in the rest of the world, right? So I think, all these things have been very interesting. For me, I'm mostly very familiar with the US market as well as the Asian market. The European market is a new market to me, but it seems to me that, in the European market, it's very unique in a way that the industry use cases of VR and AR has been very interesting. And I would love to learn more about, the industrial use cases and as well as, how corporates and enterprises have been adopting VR and AR in their actual workflow.
Okay, great. Paul, I have a question for you. Does your fund have a discrete mandate to invest in AR-only companies?
No, it doesn't.
It doesn't. Okay, what about the other funds?
Yeah, we can do that. We can. In fact, we have a gaming company that does AR-only games, and they've just. Actually, I don't know if it's popular here in Germany. There's a toy called Shushi Mushi, a kid's toy. Is that popular here? You know that toy?
Right.
So they've just done a tie-up with Shushi Mushi, whereby if your son or daughter buys one of these, there'll be a barcode on it or a QR code, and you can download the app. And it's kind of like an old-fashioned Tamagotchi, AR Tamagotchi around that. So that's a company that's producing a series of AR games that I think that are very, very interesting. We're also looking at a company that is here at the moment. I'm not sure if they're in this room, but they are in the pipeline for holography as a slightly competing technology to waveguide. And that's something that's particularly interesting to us as well. So yeah, I mean, I think I do see them as slightly different categories. I know ultimately everybody thinks they'll merge together, but I do think that there are different types of, for example, AR for me right now is kind of very interesting from an enterprise point of view. I don't know if anybody saw the Capgemini report that came out recently, which I thought was a very good report on the value of AR in the enterprise and the ROI that can be delivered on it. Whereas VR for me still is kind of education, some simulation, but a lot of entertainment as well.
Right.
And that's why within our portfolio, we've decided to take a broad perspective on the industry, do some enterprise, do some consumer, and do some underpinning tech for both VR and AR as well. Because we think by spreading that broadly, we'll be able to pick up the key trends that are coming along.
So if I understand correctly, your mandate is not limited to software only, but you also look at their companies developing hardware, sensors, content, and so on and so forth?
Well, just for us, we are primarily a software investor. So we always look at the software platform underpinning it. But we do IoT, for example, as well. And typically we do kind of verticalized end-to-end solutions for different types of IoT verticals. And they'll always have some hardware component. But we're really investing in software companies.
Right. All right. Well, it's very much software-oriented. And what do you guys think? When will the hardware be ready? And how does it look like with the industrial adoption of the hardware? It's like the headsets. Is the European industry ready for it? When is it coming? Him?
Yeah, being a CVC for, I would say, a huge industrial player, definitely. So, but I would also strongly recommend to not only be as much focused to the headsets. There's one use case where the headset is superior to your mobile device, and that's actually when you need both hands, right? So in our case, usually it's an engineer or technician. But there are so many other use cases where you can still use tablets and smartphones, and infrastructure is usually available in the industry, and you can still do great things with that. Like I would say, for example, for training purposes, you don't have to have 10 people wearing a headset. It could be one headset of one person actually executing the training and 10 people watching at the same session with a tablet what's happening. So from a use case perspective, I would say it's definitely ready, but you have to come up with a use case, and the use case not necessarily is sufficient if the use case is just it's cool. You know, for industry, it's usually either about ROI or anything that measures somehow the return or the efficiency increase, and I think that's important.
Okay. So, Paul, what is your opinion on the hardware?
I mean, also looking at other technologies and the European industrial landscape, I mean, it's somehow tough to get in as a startup, right? We've seen it with other industrial applications in the IoT space, that corporates or industrial players are moving slower, right? So when it comes to AR and VR, I would actually say that it's somehow good to run your services on devices that are already there and that do not need to integrate in the software or given hardware stack on top of it.
Ren?
Yeah, I think, you know, as Kim mentioned, right, a lot of use cases, industrial use cases that that enabled by VR or AR, it looks cool, but when we actually put this use case and try to embed this use case into the existing workflow that these companies have been applying for a lot of years, there are a lot of actual problems we need to solve before we can make the cool things happen, right? So, for example, things around how can we package up the solution, you know, how can we deliver the hardware, how can we pre-install the software inside the headsets, how can we get our customers or our employees understand better about this new medium, and how does, you know, me as someone inside VR or AR communicate with my colleague who's outside VR or AR, right? And after you solve all this problem, you have a solution, and then you need to sell this solution to these enterprises, and then you need to suffer from a long sales cycle for enterprise level sales. So yes, there are a lot of things that VR and AR can enable in the enterprise space. But how many of them are investable at this point? I think that's one of the biggest question mark if we as VCs look into this sector from my perspective.
Okay, Barry?
I would agree with that, and sometimes it's just easier to roll out tablets and phones and things like that as well in enterprise. In terms of Irina, on the question on hardware, I mean, what I would say is the hardware, of course, is getting better each year as we go by. And we are seeing lots of proof of concept type implementations right now in a wide variety of industries. And I would anticipate that those proof of concepts will turn into rollouts over an 18 to 36-month period. So I think there is great opportunity there. I think the challenge for enterprises doing a rollout is the technology probably hasn't, the headset technology in particular, probably hasn't advanced to a point where it makes a huge amount of sense to do a widespread rollout, because it is getting better so quickly and because it's still relatively expensive as well. But you are seeing, of course, clearly in aerospace, you're seeing rollouts of technology. But I'm very optimistic about this technology. I mean, and anybody who tries it out in the exhibition hall will see just how far it's come. And I think waveguide technology, such as in HoloLens or in Magic Leap, I think that will bring us to the next level. And then I think people like ourselves, I'm sure everybody else, are looking beyond that into holography, and can we actually solve problems that waveguides aren't really that good at solving yet, such as the accommodation problem. Yeah. And being able to see things at different depths in the hardware. Now, that's not necessary for every use case, but it'll certainly make them more wearable. And maybe the last thing I'd say is, in certain environments, there's practical issues, such as the weight of the smart glass on somebody's head. So I wear glasses all day long, and these are very, very light. But if you've got a very heavy set of glasses, it's going to give you eye strain, and it's going to give you problems on the bridge of your nose. And then in certain environments, even the speaker technology, such as if it's a noisy manufacturing environment, you need to have microphone technology that's adjusted to that. So there are a lot of challenges there, but I'm very optimistic that those challenges are being addressed very rapidly, and we will get into a point where there will be a rollout. And because I think the technology does add huge value to industrial, to enterprise, manufacturing, for example. So long term, I'm optimistic, and we're a long-term investor like everybody else here. So we are investing in the space.
Right. So long term is always good. Besides their sale, it's a tricky question, right? So besides the sale of Meteo and their flyby media to Apple, we have not, and a few others, of course, we have not seen a lot of large-scale exits in the AR space. So in your opinion, why did the M&A activity in augmented reality has not picked up yet?
Well, Barry just take one of his portfolio company IPO, right?
Yeah.
Yeah.
Okay, but not the M&A.
No, not acquired.
Right.
Well, I think it's, I'll let the other guys come in, but I think it's an early stage yet. The market's still developing. We've kind of not got to a point. There's certain core underpinning technologies like Mateo being acquired, and that obviously was a very good acquisition. But I think for a lot of the industry, we're still at a slightly earlier stage where you're seeing seed deals and Series A deals, and I think those exits will come. I don't know if you want to chime in on that.
Yeah, I would agree. In a nutshell, it's just about the kind of the life cycle that we're into with AR from our opinion. I mean, as long as you have issues that people have to wear 3 glasses, for example, you know, yours that you're wearing right now, then you have to wear in certain industry side security glasses, mandatory, and then you put on that still a HoloLens or another device because it's not certified as a security glasses. That might be an issue in the in the usage, sorry. And as long as you have that kind of indicates for me also an early stage of development hardware and then also the dependent software. And I think we will see them soon.
I think I would say that we can still live without it. So really coming from the enterprise perspective or industrial perspective, which AR, VR technologies have really created stickiness that you need on a daily level in a factory. And in my point of view, it's not given, so why should you value it and buy it with lots of money? So I guess it's in the end then too early or a missing product market fit yet in Germany or Europe.
Okay.
And a lot of these exits are actually not a traditional M&A, but more of a acqui-hire, right? So the big companies want to hire some talents to start new initiatives, you know, with their corporation. So I think one of the reasons is that it's early in the industry, and the other reason is that, you know, for the startups, right, they need to been through a long time before they are able to become profitable, and before the tipping point could happen so that they can grow exponentially.
Right.
And being able to exit early into the big companies, even though it's just acqui-hire, is kind of something that guarantees those entrepreneurs that they can keep working on the product that they are very passionate about. At the same time, you know, have the guarantee that, you know, they can work towards their long-term vision until the tipping point.
Right.
Irina, one of the other things I think is happening as well is the ecosystem is still developing, and there's still kind of gaps in that ecosystem as well. So we invested in a company. We announced it on Monday of last week. It was a company called Artomatics, and for me, it fills a key gap, which is just access to artists to create content in VR environments, for example. So what they do is they use AI to automate a lot of the art creation processes and the model making processes, you know, simple things like photogrammetry, for example, as well. And what they can do is they can cut the cost of production of AR and VR content, AAA video games as well, and animated movies like Pixar movies. They can cut the cost of production by up to 85% for some processes. Because actually there's a big challenge. One of the big challenges is just getting people into the industry who can create that content. So there's a human capital gap as well. There's not enough artists, there's not enough model makers. So this is one particular way of actually addressing that issue. So in terms of things that we look for, we like spotting those types of gaps as well, and things that can actually produce an outsized return. So check out Artomatics. Yeah, I'll give a little plug for them. Yeah.
All right. Okay, thank you. So Kim, you just invested in the Munich-based company Reflect in spring this year. Would you elaborate a little bit on the criteria that you've taken to like make this investment, and in general, if you do see a lot of investable startups in the European market, like in the XR domain?
Do I see a lot of startups in the general market? I would like to, of course. So what was our rationale with Reflect? From our point, as I said, we have these internal use cases that are more or less efficiency driven, that probably everyone has in mind. You know, walking around in your facilities and having all the live data on a tablet or a headset, or remote field services for technicians, and these are great. But these are not usually what we are looking at when we, for example, look now at Reflect or look at AR. We looked for a company and a solution that would enable us to provide, for example, another business to our customers, right? As a potential enabler. Like my usual example is we also do materials that get kind of, not blown up in terms of an explosion, but you infuse a lot of air, and at the end of the day you got a foam, for insulation purposes, for example. So if you could just ship the raw material to a customer site and do it there, that would be great in terms of supply chain, but you would need the machinery at side of the customer to enable this infusion of air, and you need someone to do the maintenance and to do troubleshooting. And if you would do that with either kind of a subcontractor or remote service, or in the classic days you would have usually done a lot of trainings for the technicians of the customer, that would be one approach. The other approach, you could just probably deliver also 1 or 2 smart glasses and actually say to them, everyone that's actually able to identify a wrench together with that smart glasses should be able to maintain that exact machinery. And out of a sudden, AR is not technology-wise used just because it's AR, but it's an enabler for opening a whole new business channel and a whole new way of selling a product. There are many things that we're thinking in that way, and obviously at the end of the day, for that vision, we thought that in our case, Reflect was the best fit. Otherwise, I think we shouldn't have done the investment.
Great to hear. Good. So before we go to a Q&A session, and please feel free to send your questions in the next minute and a half, and we will try to answer them on stage. I have one more question for Paul, and I guess we do have a lot of startup founders here in the audience. In the XR domain, is there a piece of advice that you'd like to give to the founders today? Like, at what stage is Earlybird investing in startups, and like any recommendation for the founders how to actually get onto your their list?
So Earlybird does seed and Series A tickets from 1 to 5 million euros, and then we are able to follow up to 20 million or 18 to 20 million per investment. Our investment hypothesis is very general. We call it forward-looking lock-in. So basically, we want some proof that demonstrates network effects, or that you have a platform where supply and demand is scaling with each other, or that you run an open source VR AR platform that somehow shows that users build other things on top of the results of other users. So really something that is, from a competitive viewpoint, not hard to replicate, even if you are called SoftBank and you throw 200 million on it. So that's somehow our investment hypothesis, and that's also a good way to approach Earlybird.
All right, perfect. I guess we can start with the questions from the audience. Let's see if we have received any questions. Okay, fantastic. So I'll probably have to stand up to read them. You're long-term investors, so when do you think XR will be adopted to the point you'll start to see returns? So I guess we had this discussion. Shall we give a quick summary, Ryan?
Yeah, so I think, it's hard to see when XR will be adopted to a point where I will start to see returns, because there are already a lot of VR AR companies start to make a lot of revenues, being profitable. For example, Beat Saber has been very widely popular, and it's just an indie team behind this title, and they already they are already cash positive for quite a long time. But I think it's a more meaningful question to ask in terms of when the mass market adoption would be happening, right? So and when people can use VR and AR in their everyday life, I think that's more of a meaningful question to ask.
Right.
So to answer that question, I would say I'm looking to 2021. And reason I'm asked, I have this this kind of projection is that by 2021, I expect the second generations of both VR and AR headsets that's going to be coming out. Which is going to be more lighter, more portable.
2021 it is.
Yeah, more comfortable.
Let's hope for it.
And it's going to be. It's basically the hardware will be much better, and then the content and everything else will follow.
All right, fantastic. So the next most voted question is: Magic Leap has disappointed despite over $2 billion in investment. Is light guide technology really the answer? Where are you investing when it comes to optics?
I can take that.
Larry.
So I think there is a place for waveguide. I obviously don't want to comment on Magic Leap, but I think the waveguide technology does work to a certain degree. There are challenges with it, such as the accommodation problem, such as being able to see things in the distance properly. So our bet is on holography, because holography actually can solve all of those problems if it can be implemented in the right form factor. But I actually think that waveguide will roll out on lots of products right now. So what I'm kind of saying is waveguide now, holography after. That's a prediction.
Okay, great. So we do have 11 questions left. Let's try to answer 2 more. And the next most voted question would be: given that most product startups are constrained by the amount of XR-ready content, is a hybrid product services for content business model the answer?
Yeah, I can take that more as probably less as an investor, but more from our corporate. I would say the answer to the question is in the question itself. If you're a startup and your requirement is that there is XR-ready content, and there is a startup next to you that is helping us in a scalable way, providing that content to XR, that's at the current state of development, that's always the startup that our company would work with, because we don't have it. We not on scale. We want to have someone showing us the way and showing us how to, and really the emphasis is on scalability here. Create the content out of our content management systems with us, because we have a lot of data, but it's not AR ready necessarily.
Okay, great.
So in short, yes, that would be the very short one.
The next question, and I guess that would be for Paul. Do you favor investing in B2B or B2C applications when it comes to VR?
In Europe, it's B2B. I mean, Earlybird does not invest in gaming, which is personally unfortunate, and that's somehow excluding a lot of B2C early stage cases, but I prefer B2B.
You prefer B2B, okay. Any other opinions?
I do both. So for Outpost, we have covered the full investment spectrum under VR/AR. So we've done content platform enabling technology, B2B enterprise use cases, developer tools, and hardware, software, pretty much the whole spectrum.
Okay, I guess as the follow-up, we will take the next question. Any of your funds has invested in VR hardware or is going to invest in the VR hardware?
That's a no for me.
And I think we need to define like what is VR hardware. Do we talking about the VR headset, or are we talking about the peripherals, including the controllers or the cameras and everything associated with it? So for me, I would never invest in VR HMD because at this stage it's a big boys game, right? And there's no room for startups. But for a lot of cases where the vision behind the startups need to be delivered through some kind of hardware. So in that case, I would consider an investment. One of my portfolio companies called Visby. They are developing live field technology, but their technology is more on the capturing side. So they need to develop some proprietary cameras in order to fulfill their vision. So it could be, I could say, oh, it's a hardware company, but the reason I make that investment is not because of the fact that they are a hardware company, but more because of their technology and the vision behind the startup.
All right, great. Well, thank you very much, gentlemen, for finding time to join our panel today. I hope you enjoyed the day.